Okay, this is 22nd of January 2022. We're into the new year. I just wanted to mention or talk for a few moments. This is not going to be humorous. It's kind of a dead serious subject. Just want to make a few points because this is kind of the talk of the times in which we live in. I'm talking about investing a little bit. Investing in banks, the stock market, the world of Wall Street. The rage over the past year or two or three has been cryptocurrencies. There's many vehicles that one can invest in. The critical thing with respect to all investments, or wherever you park or place your funds, your money, your discretionary capital, assets that you want to put to use, can even be real estate, whatever it is, it's all comes down to one word with respect to the key thing that you need to be aware of, have on your mind, and know the totality of its effects. And that is the word risk. R-I-S-K. Risk. Because life, there's risk in everything. As I'm talking now, technically there's a risk that a jet airliner could fall out of the sky and hit my truck. Now that's a very slim risk. It's almost a risk that you almost don't even have to be concerned with respect to, say, me just sitting here and talking and doing this little clip. So that risk is almost negligible. It's almost non-existent, okay? The odds of that happening are just about impossible. I would say it's probably easier to win the lottery, to win the Powerball, than for that risk event to take place. That's how low of a potentiality that risk is. But I'm making a point. I'm just making a point. And what you need to focus on and be aware of, you need to be fully aware of risk, especially with what I'm talking about now, which is where you may park your money, place your assets, place your funds, place your hard-earned dollars. As the society, the thinking society, the thinking public looks to get a greater return for their funds, capital, monies, etc. Years ago, bank interest rates were up around 4, 5, 6, 7%. And it was fully insured by the FDIC, Federal Depository Insurance Corporation, up to a certain amount per account. That was a pretty good return. When that interest rate is up that high, many people would just as soon park their money there and forget about taking greater risk by, say, placing it in the stock market or a mutual fund. It all depends on what your makeup is and what tolerance you have for risk. This is the key thing I'm talking about. Many people don't focus on this, but it is the thing you must focus on first before you then step forward and proceed with whatever you're going to do, however you're going to place your money, wherever you're going to park your funds. Even if you put your money in real estate, there's a risk involved. The area, the type of property, the interest rates, whether you're going to be renting it out, tenancies, multifamily or single family. There's so many factors. Each involves a different level of risk. Certain parts of Detroit, certain parts of Illinois, where they used to manufacture vehicles and things years ago, there's thousands of homes. Nobody's in them. You could buy them they'll basically almost give you the home for nothing. But you're not going to be able to rent it out. So there's tremendous risk in getting a return on your capital. If it costs nothing, well, but then no one will do it. It doesn't make any sense. It's kind of ludicrous. Just mention that as an example so you can kind of understand the full scope of what I'm talking about here. Risk. You had a beachfront property, you could probably rent it out for $5,000, $10,000 a week, depending on which beach you were on. But that, in turn, is going to cause the price that you pay for that asset that you ultimately will rent out to try to get a return on your investment the price of the asset is going to be very high. Whereas the price of the asset in certain parts of the country where business is gone and they're just abandoned homes, the price of the asset is almost nothing. But I'm just going to refer specifically to the markets or the banking world or the bond market and the rage over the past few years, cryptocurrencies. Everyone you talk to, they're doubling their money, they're making a fortune. It's only going up. There's a risk involved, and some of them are experiencing that now because it's not going up like it used to go up. Probably about 30 days ago, 25% of the cryptocurrency market just evaporated in about 20 seconds. Okay, that's how far it dropped and how quickly it dropped. No one's going to see that coming. Certain events took place, certain things were spoken, certain circumstances created themselves in a very unique way, and next thing you know, kaboom, 25% of the entire cryptocurrency market, I don't know how many billions and billions and billions of dollars, was just evaporated in a matter of seconds. That's the risk involved. That's what I'm talking about. This is a serious topic. I'm trying to state this to you and mention it and talk about it for a few minutes to help you. Because if you can ponder what I say, you'll be wiser with what you do with your funds. And that's the goal in me speaking here for just a few minutes. FDIC insures bank accounts, so they're up to a certain amount. So if you have less than an amount in that bank account, the risk of you losing that money is almost non-existent. Now, the bank may make some bad investments with their depositors' money, which would in turn result in them having a loss, which would in turn cause trouble with that particular bank, which would then in turn cause your savings or your checking account or your CD to, in a sense, on the bank's books, will almost look negative, like you're not going to get it back. But that's not true. Up to, say, $250,000, depends. I'm not sure what the law is today, FDIC law per account, but you're going to get that money back. That's insured by the federal government, backed by the old times used to say the good faith and credit of the United States, and that's still basically okay. It's nothing you should really be too concerned about at this moment, even though we keep adding massive amounts of deficit spending, it's called, to the federal budget. They just keep printing more dollars. The Fed does, which is a private corporation, not a government organization. And that's a note. This is a whole other topic. I'm not going to go into this. It's kind of complex. I'm trying to keep it simple. Just deal with the topic of risk. So you put your money in a CD, put your money in a checking account, put your money in a money market account at a bank. It's insured by the FDIC. There's almost no risk. The bank may go under, but eventually you're going to get your money back. That's the government's going to, they're insuring it. It's like an insurance account, FDIC. Same with the bond market. There's a little bit more risk there. You could buy a federal bond, a note, 10-year note, 20-year note, 30-year note, treasury bills. And those are pretty safe also, similar to the bank investments. So the risk there of you losing your funds is basically zero at this time. Given that all things remain the same, and I'm just assuming that at the moment in the country, globally. Mutual funds. And that is, for example, it could be a bond fund, it could be a stock fund, mutual fund. It could be over a specific sector or industry. It could be a mutual fund that invests in biotechnology, or one that invests in blue chip stocks. Or blue chip meaning, IBM, General Motors, Apple Computer, just really solid, recognized companies. Blue chip, they call it blue chip. A mutual fund, to invest in those. The odds of, because it's spread out over multiple companies, the odds of you taking a big hit of that are pretty slim. It's a pretty safe investment. You can look at the track record of that particular fund under that particular company, whatever it might be. They'll give you their return over 1 year, 2 years, 3 years, 5 years, 10 years. And you can tell how they've done. And generally those are pretty safe. They go up and down too with the markets. The stock market, the Dow, the S&P 500, the NASDAQ takes a big hit, like when the pandemic started in early 2020. And those funds are going to take a hit too, but it's still spread out because it's not in one individual stock like you taking all your money or your funds and just putting it in a specific individual stock like Apple Computer or IBM or Caterpillar Tractor or General Motors. There's a little bit more risk involved there if you individually invest in individual stocks. For example, just take Apple Computer. I forget the gentleman's name who's running it now. I think it's Cook. Over the weekend, if he declares if he declares over the weekend he's resigning, Apple Computer's going to open down on Monday morning, and you're not going to be able to do anything about it unless you've got a specific account that lets you trade pre-market. You can see it coming. But the average person is not going to be able to do that. It's just too complicated. They just put their money in it and park their money and just hope for the best. So the risk of an individual stock is much higher than the risk of a mutual fund that invests in multiple securities. Apple is secure. Apple Computer is a security. So the risk is much less in the fund versus an individual stock. It's a much greater risk. Much greater risk. I remember I had an investment years ago in the CSX, which is the railroad company, and they got a new over the weekend or on a certain night, or they announced they were getting a new president who was head of another railroad before he's moving over to CSX, and that was good news for the guy because he was very successful in the railroad that he ran before. And I had a stock option. I had an option on that stock called CSX, Central Southern Exchange, I think it's called. CSX is the railroad company that runs the trains in a certain part of the United States. And so when it was announced over the wires, the AP, Associated Press wires, the news wires, when it was announced that this man was taking over the company, that stock just jumped. It went from, I don't remember what it was. Just say it was $20 a share. All of a sudden it's 30. Just like that. Went up 50% in a matter of minutes. I had a stock option, which was worth nothing because I had bought it and it didn't go anywhere. Stock option is another thing I'll maybe talk about for a few minutes. But the stock option expires at a certain time. It's only an option on that particular stock for a period of time. And it was just about ready to expire, and the stock had done nothing. CSX had done nothing for weeks and months. It was low price, and so my option was worthless. It was worth basically zero. When they announced that man was taking over the CSX railroad, that stock jumped from, say, 20 to 30. That option went from $0 to $3,000 in seconds. Now, I'm not telling you to do this. Don't do it because you don't know the risk. Don't mess around with stock options until you know what you're doing, and that's going to take some time and some education. Otherwise, I'll call you a fool. And a fool and his money is quickly parted. If you invest in options like this, I'm going to call you a fool, and so will anyone else that knows what they're talking about. And the word on the street is a fool and his money is quickly parted. You play that game, you're going to lose your money fast. You may make it quick 1 second, and you think you know what you're doing. You don't know what you're doing. You're going to lose it as fast as you make it. I've played this game for a long time. There's a great book written on it called The Money Game by Adam Smith. You ought to read it if you're interested in this type of risk and all the different avenues that one can do in this world of Wall Street, I call it. You got to read Adam Smith and The Money Game. You'll learn a little bit about how it works. There's many, many books written about this business. Another one is by, I forget the author, but it's called Reminiscences of a Stock Operator. It's really good. If you're going to play around in it, more than just park your money and go to bed and forget it, you better get some education, or they're going to hand your head to you on a platter, okay? You'll wonder what happened. Because you're the fool and your money, they're quickly parted. Barnum and Bailey said there's a fool born every minute. And all they want to do is put their money in the markets or crypto, and they're going to be millionaires before the month is out. Buy their Ferraris and their beachfront homes. A few do it, but you let them play it long term and you watch, it'll get all taken away. Just like gambling. It's just no different than gambling. But a smart person that's in the market is not gambling. He's making wise bets. Putting your money in a mutual fund, putting your money in a bank account that's insured by the FDIC is a wise bet with your funds. That's what I'm calling it. Again, I'm focusing on the word risk. You need to know what the risks are with whatever you do in life or with your funds. And most people that invest or put their money somewhere or park their funds, they really don't know the risks. They do not. It's not explained to them. And they think they know what they're doing because John next door or down the street told them, yeah, he made $1,000 in 2 minutes or in 3 days. And so the person says, why can't I do that? Everyone says, so off they go. No one knows the risk. Those people don't know what they're dealing with. They don't. They sound smart and wise. Look at how much money I made in a month. Bought Bitcoin at 22,000. Now it's 30,000. Look at that. Wow. What a... Everybody applauds for the man. Great job. Wow. Why can't I do that? And that's what everyone thinks. It's greed. It's just another form of greed. You don't know what you're dealing with, folks. You really don't. I'm trying to tell you. I'm trying to be a little strong and hard with it. You don't really know what you're dealing with. You don't know the risk. Just because someone makes money in Bitcoin over a period of a month, everyone thinks he's a hero. Look at how easy it was. He just put my money there. Now it's worth 30% more. So much more than I'm getting at the bank account. I'm making more money than I'm making on my job. I got to just quit and invest in Bitcoin. Yeah, you try that. I call you a dummy. You're a fool. You don't know what you're dealing with. It's a whole other world. You need to get educated. Most people are not. 99.9% of the people that are involved in that world, whether it's crypto or stock, they're not educated at all. They don't really know what they're dealing with. So you better park your money with someone that has a track record so that you can sleep at night. So you don't wake up investing in General Motors and you find out in the morning that the president resigned over the weekend and General Motors opens 25% down in the first 2 minutes. And you see you lost 25% of your investment. Hopefully that's not something you were relying and counting on that you needed to pay your rent. I'm trying to explain the word risk. There was a fund out of Florida a few years ago. They were investing in commodity options. I think it was options. It might not have been options. It might have been just the actual commodity themselves. They were buying out of the money. I think it was options. Out of the money options. They were selling them. And it was so far away from the price. Say natural gas was trading at $25 a cubic foot or whatever it is. They were buying them at 40, 50, 60. They were selling them at 40, 50, 60 cubic, however it's denominated, natural gas contract. They were selling options way out, far from the current price. That means if they could sell them, that means someone was buying them because they could not sell it unless someone would buy it from them. Then they sold it. So say the price of natural gas was $25. They were selling out of the money option contracts on the natural gas futures contract at, say, $70, $60 a cubic foot. It's like $40 out of the money. But someone was buying it. Someone was taking a shot that natural gas would go from 25 or 20 cubic feet to 40 or 60 in a period of time. They were making that bet. It's a long shot that would happen because that's a massive increase. So someone would take the other side and sell that to someone. Who's the greater fool? I don't know. We'll find out. I'll tell you what happened. So they were selling these contracts. They were selling, I'm not going to get too technical. They were selling it on the upside. They were selling it on the downside too. Both sides. Out of the money. The odds of natural gas hitting those prices during that period of time that they control the option are very slim because that's so far away from the current price. So in a sense, they were just banking that. So they were selling those contracts for a period of, say they're selling a 2-month contract, a 1-month contract, or a 2-week contract, an option contract. And if the price didn't go there, the one that sold it keeps that profit, that money. But the one that bought it loses everything they bought because the price didn't go from the 20 to the 40 they were hoping it would go to. So they presented their business to the investing public as a very safe investment. That they had a good track record over many years. They were making a pretty good return monthly. Say 10% monthly, 15% monthly, whatever, something like that. Might have been less. So people would take a lot of money, their savings, they put it in there. Instead of putting it in the bank and getting, past few years, you're getting like point nothing percent. They were putting their money with this company who was buying these out of the money, who was selling these out of the money options. And those options they were selling were expiring worthless because the price didn't spike to that level. So they would keep the money that they got from the person that bought it, that gave them the money because they sold it. They were doing this for years and making a pretty good return for these people who were putting serious money with this company. It was an option selling company out of Florida. And just telling you the story to show you about risk, tell you a story about risk. So these people were taking their money, these families, husbands, wives, they savings, they ran a business in America for, say, 40 years. They're in their 60s now. They got $2, $3, $4, $5, $10, $20 million set aside. They would take that money and they were giving it to the option seller concern, and the option sellers were selling these option contracts on natural gas way out of the money. And for years, they were just getting a good return. So someone that said they were getting like, say, 4, 5, 10, 15% return on a yearly basis, or maybe more monthly. I don't remember what it was, but it was a very high return compared to, say, the bank world. And they were winning every time. And this was going on for years. So they kept getting a better track record, and the word of mouth spread. This is a good place to park your money. So people that had their savings after working their whole life in a company, now they got, say, $20 million. They put it with option sellers, and they're getting like 3, 4, 5, maybe 6% a month. It's just incredible return. And it was billed as very, very, very low risk or non-risk. Or I don't know what was told to them, but the track record on the firm was very good. Because they were so far out of the money, so far away from the current price of natural gas, that the price of natural gas would never hardly hit there. So people had millions of dollars with this firm in Florida. Here's my point. It's an amazing story what happened. So just say they had hundreds of millions under investment. They were controlling. It was like a fund. They had hundreds and hundreds and hundreds of millions of dollars, I believe. Or a lot. It was up there. And amazingly, and my point is I'm talking about risk. What I'm saying is what these investors that gave their money to this option selling firm, they weren't fully told the risk involved. So here's what happens. All of a sudden over one weekend, something happens because natural gas, say it's a byproduct of drilling oil. It's a different level in the ground. So say in the Middle East, they're drilling for oil, and they also got a part of a crew there. They're also pulling natural gas out of the ground. So just say, I don't know what happened. I don't remember the details, but something happened with respect to speaking or talking or dealing with the world of natural gas on the globe. It happened like over the weekend or something like that, or even during the week. I don't remember when it happened, but something was said, something was done, something was happened, something was spoken, some government official, something that caused the price of natural gas, I think, to spike from like $20 to $60 a cubic foot in a matter of minutes. So if the guy who bought the natural gas contract, he was hoping that would happen, but it rarely ever does move like that much in a short period of time. But so it's a total gamble for the guy who buys the option contract. It went from like 20 to, say, 60 a cubic foot. The guy bought a $40 option, hoping it would hit 40. It hit it, and then went past, went another $20 a cubic foot past it. But the person that sold it, hoping that because it never spikes like that, those option sellers, that company in Florida that had hundreds of millions of dollars of these American people had their money invested in safe investment, all of a sudden when the price of natural gas, the contract went from 20 to like 60, and they say it had sold at 45, say they had sold contracts at 50. Now it's above the price they sold it. Now they owe that extra. Now they have to pay the guy that bought it, hoping it would go from 20 to 60. And the option price on the guy that bought it, he bought it for like nothing because it was so far out of the money. He paid like maybe pennies. Now it's worth, say, $10, $20, $30, $40 a contract. He paid pennies for it. That's a gamble. Don't do it. It's a big mistake. You're a fool if you do it. If you do what I'm telling you now, you're a fool. You should lose your money. You're making a stupid gamble because you don't know what you're dealing with. I'm telling you about it because I know this business. When that price jumped like that, all of a sudden it spiked because of something that was said globally. The market reacted and the price just shot up. The price of natural gas just shot up like a rocket. It might have gone down, but it shot up like a rocket. I don't remember which way it went. All of a sudden, the contracts of the buyer are worth a ton of money now. He paid nothing for them. Now they're worth, say, $1,000 a contract. And the one that sold it, that received the money from the guy that bought it, he paid, say, a penny for it. They gave him the penny. Now it's worth $40, $50, $60 a cubic foot. They have to pay him the 60 now. They don't have that kind of money. They never thought that would happen. It was such a, what's called an outlier event, an event that's so far out of the odds of it happening, it's almost impossible. That's what we call an outlier event. All of a sudden, this event that's out, that hardly ever happens in 20 years, all of a sudden it happened. It happened in a matter of minutes. And those option sellers who had been raking in pretty good returns for months and months and years, and outlier events never hit them. Now the outlier event hits, and the contract they sold for 40 is now worth 60. They got to pay the guy they sold it to. It's worth thousands more. So they had, say, 200 million invested in their firm. They owe like 400 or 600 million. They don't even have it. It was a stupid strategy. The risk was not explained to the people that gave them their money. That's my point. I'm talking about risk. The risk was not explained. It might have been explained, but not fully. So that the investors that put their money with this company in Florida that was selling option contracts on natural gas, so that the people would know that if something out of the blue happens like it did, and the price spikes beyond the price we sold it for, you're going to owe more than you put in. I'm not going to go into it. It's too complex. I'm just telling you that's what happened. The company went out. The company got hit with what's called a margin call. In other words, you're short money that you owe for the contracts that you sold. You don't have enough to cover them because now they're worth more than you sold them for. Now you have to ante up and pay the difference because you sold them to a guy. He's going to get the money that he made because he took a gamble that was going to go higher. You got to pay him. You sold them to him at a certain price. It's even more now than what you sold them for. You got to pay him the difference because he's getting it all. He bought the contract. The contract is worth this now. It's worth more than you sold it for. I'm not going to get into it. It's too complex. I'm just telling you. All of a sudden, they owed hundreds of millions of dollars more than they even paid for, than they received for these contracts, and they didn't have that kind of money, even though they had a lot invested with them. And everyone that had their money invested with this firm, they were getting calls from the Securities Exchange Commission. You got to pay the difference. You got to pay this. They come after them. What a mess. The company went out of business in a minute. They didn't have anything to cover anything that they had invested in and sold contracts in. And the people that bought the contract, they're not even going to get their money either because the guy that sold it to them, he doesn't have the money either. You got to know what you're doing in this business. You're going to get your head handed to you on a platter. And those people all got their head handed to them on a platter. All their life savings were gone in a matter of minutes. All of it. All of it. You got to know what you're doing. My point is, you got to know the risk potentiality here, or you're making a big mistake and you don't even know what you're doing. You're playing in a game, you don't even know the game's rules. You don't know how it's played. They're going to hand their head to you on a platter. Every one of those people got their head handed to them on a platter. Their whole life savings are gone in a matter of minutes. Less than that. They didn't realize what they were doing. Here's my point. You better know the risk involved in wherever you park your money, or you're a fool. And there's a fool born every minute. And all they want to do is make more, show everyone how smart they are. Because Johnny Smith down the street made 40% in Dogecoin over a period of a month. And he's strutting around like a hero, like a peacock hero. And they don't know the risk. I'm just going to tell you the risk in cryptocurrency real brief, too. You don't really realize it. The banking world is governed by the FDIC. It's a federal deposit insurance corporation, up to so much per account. If something goes wrong, your money's back. You're going to get your money back. It may take a little time, but you get your money back. Stock market is the same thing. Stock market is governed by the Securities and Exchange Commission. Bond market, too. That's going to cover any shady things, or if something goes wrong with a firm. You're going to get covered there. You're going to be covered up to a certain amount. The cryptocurrency world does not have any government body over it at all. It's a totally independent, totally free, totally almost like a wildcat world. Gunslingers and mafia hitmen run it. They do. So I'm not saying don't put your money in cryptocurrency. What I'm saying is you better know the risk. And here's the risk. If you want to put some $200 in in Dogecoin or Ethereum something and watch it double over a period of 4 months, fine. Hey, that may happen. It has happened to many people. Many people have become millionaires in that world, but and it went their way for a while. But long term, there's a risk. There's a risk, and they don't even know the risk, and most people don't know it. And I'm going to tell it to you. There's no government body that oversees that if something is wrong or awry or is done improperly or is. And so here's what's happened. This has actually happened. All you got to do is Google or search on the internet cryptocurrency hackers. And what you will see is there have been hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of millions of dollars that have been hacked out of people's accounts because there's no government body that oversees it or protects it. And once it's hacked, it's gone. There's no one that's going to come and say, we'll get it back for you. No. Let the buyer beware. Your money's gone, pal. It ain't coming back. The cryptocurrency world, and I'm not saying don't put any money in it, but I am saying you better be wise and understand the risks involved. This is my point of this whole thing. You better know the risk of where you're parking your money or you're just another fool. And a fool and his money are easily and quickly parted. History bears it out for thousands of years. So a very sophisticated computer guy, and I know one personally. He's one of the wisest, sharpest computer wizards I've ever met in my life. And he can get into an account, a bank account, a corporate account, and hack money out. No matter how many firewalls or fancy encryptions you got or layers of protection, you know what you're doing, you can get in it. And there's certain people that have that skill, that computer ability. So many cryptocurrency accounts have been hacked over the years. You don't even hear about it. It's sad. And if you have, say, a couple of $1,000 in an account and it gets hacked, that means some computer whiz comes in and takes your money right out at night while you're sleeping. And you wake up in the morning, you had $2,000 in it on Friday night. Now you wake up Monday morning and you got nothing. There's only $100 in it. And you say, hey, what happened? You call them and say, hey, too bad. You should have known the risk. It's not told. That's the point. The point I'm making is the risk is not told to the average person. More than average. 99% of the people that are involved in that crypto world, they don't even know the risk. They don't know how easily they could be parted with their money and wonder what happened and who can help them. And nobody can help you. It's too late. It's called let the buyer beware, you fool. You blew it. They're handing you heads on a platter. It's your fault. Same with the natural gas folk that lost everything they had. Every dime, every penny they had is gone. They're never going to get it back. Never. My only point in all this is you better know the risk of where you're parking your money, no matter what your neighbor down the street tells you how much money he made. I say, whoop-de-doo. He took a gamble and won. He could have took a gamble and lost it all, too. He didn't tell you that. No one's giving you the whole story. I'm giving you the whole story right here. Putting it right out front on the table. Being honest and straight and hard with you. This is the world of Wall Street. I call it the big money game. It's a game. And most people that invest in it, they lose it all or a good portion of it. During 2000 when the dot-com, all those internet stocks, when they tanked, people had so much money there, it dropped. They never got it back. Or if they got it back, if it came back, it took 5-6 years to rebound back. You better know the risk of what you're messing with, where you're putting your money, or I say you're just another fool that's going to be easily parted with his money. That's my point of this. You better know the risks involved in whatever you do with your funds, or you're just another fool on the street. And they will, the world of Wall Street, the big money game, it will hand your head to you on a platter, and you won't know what the heck happened or how it happened. You'll be in shock. And you know what? It's your own fault. Let the buyer or investor beware. Know the risk of where you're putting your money. And there's very few people who are going to even tell it to you because they don't even know it themselves. You better know the risk, or you're just another fool gambling in Vegas or Atlantic City. There's nothing different about what you're doing. I'm going to stop here. We'll call it quits. I'll just add this one thing, because it's taken me years to learn about this risk. This is an education. I've been educated by losing a lot of money. This is back 20, 25 years ago. I invested in stock options. I picked 10 or 12 stocks. I picked like IBM, Caterpillar. I picked a number of internet stocks. I bet with an option that the price was going to drop. This was during the dot-com bubble. And it did drop, amazingly. And I put 6 figures into it. I'm just going to speak like that. 6 figures into it. On Wednesday at like 4 p.m., the market closes at 5 or 4:45. I put it in before it closed. So I bought contracts on 10 or 12 different stocks. Some of them were internet related, RIM and certain ones. I think I bought Amazon. I forget exactly what it was, but it's a long time ago, 20 plus years ago. But they were options. Cheap. I bought them cheap. That the price would go down on this particular security. I got them in before the market closed the end of the day, say on Wednesday. Thursday morning I woke up and the price had doubled. So that 6 figures, say it was 100K, now it's worth 200K or just about. Now I look like a hero, okay? Well, everyone's like, wow, this guy knows what he's doing. Oh, really? Oh, really? That's what you would conclude, he knows what he's doing? And maybe you should do it too? No, I was a fool. Someone wisely told me, you ought to sell it right now. I said, no, it's going to keep going. I gave every penny back. Every penny and then some. A fool. The fool. There's a fool born every minute. I didn't know what the hell I was doing then. I did not. I thought I did. I did not. The fool and his money was easily parted. Oh, yeah, I'm pointing to myself. I was the fool. Who was the greater fool? Me. My head was hit. I looked like a bloody fool when it was all said and done. You had it, you didn't keep it. Everyone's a great backseat. They tell you to do this, oh, come on. The only one that really can speak is someone that's been in the trench with you. Otherwise, they have no experience with it. They shouldn't even talk. But everyone's talking. Everyone's giving advice. That's all you hear. I heard it on the radio the other day. It's a great time to buy Dogecoin. I'm like, these people don't even know what they're saying. They're just leading the blind public down another blind path. They're both going to end up falling in the ditch. It's such a shame to hear it. I'm not saying don't invest in Dogecoin. Don't take me out of context. No, I'm just saying know the risk. That's the point of this whole thing. So I gave it all back. Now, there's a saying on Wall Street. I'm going to leave you with this, and I'm going to end after I say this. When you make money, you're happy. Everyone's going, boy, I want to do it too. How do you do it? When one makes money, everybody's happy, especially the guy that made it. He's glowing like he's the smartest guy this side of the Mississippi. Everyone's happy. But when you make money, you're happy. But when you lose money, you should be wiser to not so easily do it again. That's what people don't learn. Because people are living, but they're not learning from their mistakes. So all you hear about is the success stories. You don't hear about the horror stories. I told you about one about the option seller firm in Florida. I told you about a horror story. You don't hear that too much, or you got to dig to find those out. All they put on the front page is the guy that invested in Ethereum at 100, now it's worth 800, and he's driving a Ferrari now. I say, whoop-de-doo. He caught it right. Let him hang in long term. He'll give it all back. He's not smart. He's lucky. He's not smart. All his neighbors and friends, because he tells them what they think, and they put him on the front page of paper, everyone thinks he's smart. He's not smart. He's just lucky. They spun the roulette wheel, and he had it on the right one, and it landed on. He's lucky. He doesn't even know the risk, like I explained it. So his 800 in Ethereum, he can then wake up the next morning, it's all gone because the guy hacked it out. Now every profit he made is all gone. Every dime he made is gone. He doesn't even know the risk. But he talks like he's a smart. Everyone thinks he's smart and wise. It's a lie. It's not the truth. I think you can catch where I'm coming from. I'm going to stop here. Just a little tidbit on risk in the markets and everyone trying to make money today in 2021, 22. Oh, I want to make money. Oh, it's so easy. It's not easy at all. It's the hardest business on the face of the earth. And most people don't even know it. And they got everything they got in it. Serves them right if they lose it. You don't know where you put your money, then you're a fool. You don't know the risk, you're a fool. And you got to be parted with it sooner or later. Just hang in there long enough. All right, I'll stop there. Thanks very much.